Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Michael Joyce, partner with Energy Transactions and Projects at Vinson and Elkins. We also have Cantor, U.S. EV analyst at BloombergNEF. We're going to discuss energy transition policy and scalability, and we'll also evaluate general infrastructure challenges facing the transition and the differences in approach being taken by the U.S., EU, and China. But let's start stateside first. President Biden signed into law the Inflation Reduction Act on August 16th this year. The law calls for investments of $437 billion over the 10 years from 2022 to 2031, of which nearly $370 billion is for investments towards energy security and climate change. It is great to have you both with us. Welcome to Trade Talks. And Michael, I want to kick it off with you. What do you think the IRA Act is going to impact the energy transition, more specifically the EV space?
Thanks for having me, Jill. Well, it's an incredibly broad piece of legislation hitting on all parts of the transition market. And as you know, we want to focus on EVs here today. But I would note that my colleagues and I have spent the better part of the last 3 months having conversations with everyone across the energy industry, from traditional incumbents to the majors, in terms of how this legislation affects them. On the EV front, frankly, a lot of the discussion has been around the manufacturing and mining credit and how that will move the market. You know, there was a little disappointment in the way that 30C was structured for the cars themselves in terms of the limitations. Sorry, the 30C is the other credit, excuse me, and the limitations on the charging being outside of urban areas and in rural, in terms of how that would work with financing and building out this infrastructure. However, in order to move the market, we're going to need large-scale adoption, and onshoring manufacturing in the U.S. and dealing with some of the supply chain issues has been a primary focus of a lot of these EV manufacturers before the legislation. Adding this economic piece of the puzzle really makes it easier for some of those deals to pencil and those projects to move forward. So you have two things: a bunch of projects that were long thought about that are now getting green lit because of the additional incentive. And then I was approached at a conference last week with someone and said, hey, I've got 3 sites I was looking to build in Europe. We're looking to break into the U.S. market. Can you help me unpack how this legislation might justify repurposing one of those facilities to be onshore in the U.S.? So it's moving markets today, and that's the salient point.
And Corey, let's talk about that, the different approaches that we're seeing between the U.S., EU, and China. How do they look different, and how are they similar, if at all?
Yeah, thanks for having me today, Jill. Really appreciate it. I think for the first time, if you look at maybe the past year or so, the U.S. has gotten in the policy space where they're in the game. For a while, China has been doing a lot of industrial policy around electric vehicles since about 2015, and you see that their EV share of sale last year is about 15%, in Europe 20%. The US last year, only 5%. So we're only at the beginning of getting started, but really with the policy passed between the Inflation Reduction Act, the Bipartisan Infrastructure Law, and the CHIPS Act, billions of dollars going into electric vehicles. If you just go back to IRA and you look at the past maybe 3 months, we've been tracking it at BNEF, over $13 billion in investments announced since August. And many more of those automakers are thinking, you know, do we make the investments? Do we move things from Europe over here to the US? And really, I think when you see the end of Treasury guidance, which is going to kind of outline the rules of the road for IRA, you'll see more of those investments and announcements being made. Right now, everyone's trying to figure out, you know, where can you source materials from? Where can you build battery components? But people are excited. I think some automakers are a little bit more stressed than others, but it's a really big opportunity for onshoring here. It really is an industrial policy in the US.
And we'll get to that in a moment. I want to dig more deep into the infrastructure challenges and the scalability challenges that we're going to be facing. But let's talk about some of the incumbents that are more well known in the space, that are either manufacturing batteries or they are producing these EV cars. How are they being challenged?
Well, I mean, Tesla's long had the run of the gambit, right, with being the first to market, being the sexy EV vehicle. And now you have other people coming into their space, whether it be Rivian, who has kind of that same cachet in the market in terms of being a newer brand, but someone looking to occupy that same space, as well as the incumbent automakers, Mercedes and BMW coming to mind as folks that are putting out EVs that will compete with, not just compete with Tesla, but have a larger support infrastructure behind them and a more traditional support infrastructure. So Tesla is still very relevant, still is kind of the benchmark, but I think it's fair to say they're being challenged.
Right, and then when we think about some of the mandates that might be coming through by 2030, 2035, where there will be EV mandates in states such as California, EV cars are expensive, right? So not everyone can afford a car that's 30, 40, 50,000. Some of these EV trucks are, you know, in 6 figures. So how do we kind of rectify that there? The first thing has to be infrastructure. We could build all the cars that we want, but if we don't have the infrastructure to support and charge these vehicles, you know, it's like building an airplane without an engine, right? So what do you think in terms of, will we have the infrastructure to support this? Because it's 10 years is not that far away.
Yeah, 10 years really isn't that far away. And I think infrastructure, both two ways to think about it, two ways I'd like to think about it. Most of charging is still done at home, so 85 to 90% of EV charging for folks in kind of suburban areas makes a lot of sense to go electric if you have these subsidies and market incentives in place. As a part of that kind of bipartisan infrastructure law, you get the highway funding to kind of build out the national charging network as a part of the NEVI program. $5 billion worth of investments towards EV charging. Money only started rolling out maybe a couple months ago, and that's really imperative that they get it right. What you've seen in Europe and China, for example, is much more focus on EV charging and building out that network. So I think it's definitely something to be concerned about, but definitely not insurmountable in terms of a challenge. And the way we think about charging needs to be different too, because it's not similar to just filling up a gas vehicle. Sometimes you can have a bunch of fast chargers. Other times you just need at your kind of mall or the airport parking lot, slower charging. So it's going to be a kind of mix and match, but the focus has to be there.
So what does that look like? I can't take my Apple phone and charge it on an Android charger. Are these all the same type of plugs or outlets? Or, I mean, what does that look like too? Are they going to have something that's universal?
So most of the charge points of the world do have conversions, so you can charge your Tesla or your Leaf there, it doesn't matter. There are, obviously Tesla's a proprietary network, those only charge Tesla. In terms of the automakers that are looking at fleet charging, again, Mercedes, Rivian, the discussion is that they will have some open source. There'd be maybe a perk for the brand, like you have a discounted rate or maybe a free number of hours, but then other folks will be able to charge, largely due to the policy in the states where they will put those. Like in California, you need to have open source charging. So that remains to be seen. Kind of going back to something that Corey was talking about, though, on the adoption side of things, you know, and charging at home, in order to broaden adoption, we really need to think about how that looks outside of suburban America and how that looks in urban cities and multiplexes. And that's where the question is, that's the next place where I see that this needs to be fixed in terms of the charging answer. And maybe it's not a high-speed charger, it's a trickle charge, but kind of broadening the access to folks that don't have a garage where they can charge overnight.
Because it's so interesting when you go to the cities, even if you look outside in Times Square here, the garages, when you first pull in, they are allocated to electric vehicles. You even see it in parking spots outside. So it's almost the opposite is happening where you're seeing it take place here, not to mention the electric scooters and the bikes and all that other stuff. But from a legal perspective, can they mandate you have to have this kind of vehicle? Or how are they going to subsidize?
Well, that's the question. It really comes down to model choice, I think, is the question we're talking about at some point, because you can mandate that you can't sell cars that are ICE after a certain date, but will consumers just go back and buy used cars? Because you can't shut that market down. So there still will be consumer choice. What we're really talking about is legislating through policy on new vehicles. In order for that to work, you do need to have cheaper cost models. Now, there has been a lot of focus on that. Kia's entered. Their price point's, I think, around 60. We'd expect that to come down over the next 2-3 years to something that gets closer to that 40-45 range. Getting to that 20 to 30 is going to be a challenge. And that will really come with scale and experience. I mean, we mentioned the number of folks that are standing up factories. A lot of that comes in the efficiency of the factory over time. The other big challenge, of course, is commodity pricing. And that's really throwing a wrench into all of this.
Right. If you're a single person that can afford, you know, you don't have any kids to worry about. It's the families that have 3, 4, 5 kids where they need the larger vehicles. Not everyone can afford an SUV that costs over $100,000. I can't even wrap my head around it whether I can afford it or not. So they do have to scale it out, and it has to be practical.
Yeah, can I jump on it?
Yeah, of course.
I mean, you're definitely seeing a few EV models. I think General Motors and Nissan are the ones to watch in terms of their more affordable pricing. So GM has the Bolt, which has had, been around for a couple of years, fully electric. Next year, they're introducing a couple of new models, the Equinox and the Blazer EVs. So those are expected to be more in the $30,000 to $50,000 price range. Again, when they initially stated that battery prices weren't necessarily as high as they may end up being next year due to those commodity prices going up. But those are the type of automakers that can kind of fill out the space. In addition, Ford, the F-150 Lightning, even with the kind of price increase, is still at about $50,000 for entrant. And when you're looking at a comparable normal F-150 for what people want to kind of soup up their vehicle, in the same ballpark. I think it's going to take a couple years for the Hyundai, Kias of the world, Toyota to really onshore enough in the U.S. to be making an impact and driving down those costs. So for the short term, really General Motors and Stellantis, I think, are those to watch to kind of hit that more affordable price range.
So it sounds like this is going to have to be done via public and private partnerships, for sure.
Yeah, certainly, and the government's very focused on this. I mean, one of the things that they're focused on is the charging infrastructure, right? Because if you look at it, it's policy, consumer choice, and infrastructure. Those are the three things, like kind of going back to the China example of where they've driven the growth over the last 5 years, the right mix of those things. And what's clearly lacking, the policy is now catching up. And the government is focused on going all the way down to 10 years out, looking at vehicle to grid and what that looks like, and starting to think ahead about the infrastructure for that. So you clearly do have the public involved. The policy takes time to implement, though, right? So it's going to be a couple of years before we see. I mean, a year ago was the Infrastructure Act, 3 months ago was the IRA. We're now seeing both of those things kind of come to fruition. The IRA a little bit faster because of how poised people were to jump on it. But it's going to take a little bit of time.
Yeah, I mean, the technology is always going to evolve quicker than whether it's the auto industry or not. From a macro perspective, however, these are great jobs, right? I mean, these are salary jobs. They're the jobs of the future. Do we have the labor force and the skill set available?
Yeah. I think that's one question on battery production in particular. When we kind of model out how much battery production will be needed in North America or how much EV demand there will be, we have nameplate capacity, meaning we have, what we expect a factory could produce, but it doesn't mean that the labor force is there. And that's one of the other kind of inhibitors of kind of building up a domestic manufacturing around electric vehicles is you've got to train a lot of people. But it is a big opportunity. And you've seen Rivian, for example, taking initiative, partnering with community colleges, another kind of stakeholder that you've seen traditional automakers work with a lot on this electrification challenge. One other stakeholder just to bring into the conversation is utilities. There's a lot of opportunities there for utilities to take the lead. Historically, some utilities have been more progressive on EVs and some less so, but you're really going to need everyone from community colleges to utilities, to policymakers and the auto companies themselves to kind of train that workforce to be ready to jump in.
Yeah, well, we're seeing that in the tech space already, right? I mean,
it's a massive challenge. I mean, and we've seen it in kind of the domestic utility scale market, just with all the rush for ESG trade winds and other reasons to folks to go into just generation. We've seen talent poaching. And when you have a smaller talent market to begin with, in terms of we haven't manufactured a lot of batteries in the US, we haven't manufactured a lot of EVs in the US, kind of how the people that have that experience get allotted to the different startup's not the right word, but to the different OEMs is going to be problematic, because you will have some shifting that's going to lead to inefficiencies in the production side and presumably some recalls, as we've seen with some of the manufacturers as well. So there will be growing pains, but the growth is exponential at this point. So it's part of the process.
Yeah, I mean, especially we have, compared to the EU and China. I mean, we have the biggest growth trajectory since, we're not as far ahead with them in terms of electric vehicles that are being consumed.
You can really have market share continue to take off. We project by 2030 for EV share of sale to be about 52% following the passage of these laws. A couple years ago, we were looking at about 2% market share. And again, as I said before, 2021 EVs were about 5%, and the first half of this year, they're close to 7% of passenger car sales. So you see that kind of movement happening. But again, there's going to be some hiccups. I think there's already been some hiccups this year in terms of delays. One thing I always like to think about is kind of production and volume over just the number of new models. And I think beyond Tesla, we haven't seen that kind of high volume yet. I think Jeep and Ford are maybe two who you're beginning to see it. But that's kind of my question for the next 2 years is how do you kind of build that S-curve up and start accelerating?
Yeah, and I think we've seen evidence that it's not as simple as just taking your traditional ICE and changing it to an EV. I mean, if you look at BMW, they're not even giving times on their EVs when you put your name in the queue. Rivian took a while to roll them out as well. So there is a challenge to building these cars. There is a know-how factor, and again, time. It's what it's going to take.
Right. All right. Well, Corey, Michael, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.